Welcome to Iron Financial, the place where we forge stronger portfolios and help you cut right through the market weakness. All right, today we are diving deep into a classic market paradox. And this is a situation that every single serious investor has to understand. How can a company get up on stage, post absolute record numbers, beat on every metric you can think of, and then get completely hammered by Wall Street? Well, that's the story of Adobe right now. You've got this titan of tech that, on paper, seems to be firing on all cylinders, but its stock chart, man, it is telling a completely different, much darker story. So our job today is to break down the entire structure of this company, brick by painful brick, to figure out what is really going on here and whether this is a deep structural flaw or a massive foundational opportunity. And look, this slide right here is the whole conflict in a single picture. On the left side, you've got the bull case in its purest form. I mean, look at those numbers. Record Q1 revenue of $6.4 billion. Record earnings per share of $6.06. These are absolute monster numbers by any standard. This is the kind of report that should have champagne corks popping all over Silicon Valley. But then your eyes drift over to the right side of the screen, and you see the market's brutal, cold verdict. The stock is down a punishing 22% year-to-date, and get this, it even slipped after they announced these incredible results. So what gives? What is Wall Street seeing that the headlines and the company's own press release clearly aren't? That's the billion-dollar question we're here to answer today. So here's how we're going to attack this. This is our battle plan. First, we'll dig a little deeper into this earnings paradox. Then we are going to build the bull case, piece by piece, laying down the heavy steel and reinforced concrete of Adobe's immense financial strength. After that, we're going to do what we do best here at Iron Financial. We're going to stress test the entire structure, looking for any cracks in the armor. From there, we'll parachute right into the middle of the AI battleground, because frankly, that's the key to this whole story. And finally, we will deliver our verdict. Is Adobe a fortress built to last for the next decade? Or is it just a beautiful facade hiding a foundation that's starting to crumble? Let's get into it. All right, let's get to work. It's time to build. Before we can even begin to talk about the fear, the doubt, the uncertainty swirling around the stock, you just have to respect the foundation. And let me tell you, Adobe's foundation is built on some of the most solid financial rock you will find anywhere in the market today. We have to begin with the top-line strength because it is, frankly, undeniable. It's the source of all their power. So let's really get into these numbers. Okay, let's start at the top line. Just look at this number for a second. $6.4 billion. Let that sink in. This isn't some tiny beat over the $6.28 billion Wall Street was looking for. No, this is a record, the highest quarterly revenue in the company's entire storied history. This right here is the financial bedrock that supports everything else. It shows you they have pricing power, incredible customer loyalty, and just sheer market dominance. You simply cannot build a credible long-term bear case against a company that is still growing its top line at this kind of scale. This is pure, unadulterated financial strength. But you know, top-line growth is only half the story, right? It's not just about what they make. It's about what they keep. It's about profitability. And here we have $6.06 in non-GAAP earnings per share. Now, the street was looking for $5.87. So they didn't just squeak by this number. They absolutely crushed it. This really showcases their operational muscle. You know, in a tough macro environment where you see other companies really struggling with their margins, Adobe is out here executing with surgical precision. They are squeezing more profit out of every single dollar of revenue than anyone thought possible. This is the sign of a well-managed, incredibly disciplined machine. Now, this is where things get really interesting, because we have to talk about the cash. Revenue is one thing. Earnings per share, that's another. But cash flow? Cash flow is the oxygen of a business. It is the ultimate truth serum. And Adobe is generating a torrent of it. We're talking nearly $3 billion, $2.96 billion to be exact, in record Q1 operating cash flow. This is the lifeblood of the company. This is what fuels their massive R&D budget so they can go fight the AI war. It's what allows for strategic acquisitions, what pays for the billions with a B in stock buybacks that help support the share price. This number right here proves that Adobe is not some paper tiger with clever accounting profits. It is an absolute cash-generating fortress. Okay, so the crucial question is, where is the new growth coming from? Is this just the old legacy machine chugging along? The answer to that is a definitive no. And you can see it right here. This is the engine of future growth, artificial intelligence. This chart shows their AI-first annualized recurring revenue, or ARR. And just to be clear, this is that sticky, predictable subscription revenue that comes directly from their new AI products and features, like Firefly. And just look at that growth. It has more than tripled year over year. This isn't some small experimental side project. Adobe is successfully layering a powerful new growth engine onto its already dominant foundation. They're literally building the next decade of their growth right in front of our eyes. Tripled sounds great, of course, but is it just hype? Is it actually translating into real dollars and cents? Well, this quote right here, straight from the earnings call, is the smoking gun. This is hard evidence of their AI monetization strategy firing on all cylinders. Listen to this. They took an existing enterprise client that was already spending $10 million a year with them, and they upsold them an additional $7 million in Firefly AI services. I mean, think about that. That is a 70% increase in contract value from a single customer, and it's likely on a multi-year deal. This proves beyond a shadow of a doubt that the AI strategy isn't just a fancy press release, it is a high-margin, high-growth reality that brilliantly leverages their existing sticky customer relationships. All right, that is a powerful bull case, an ironclad foundation of record revenue, record profit, record cash flow, and a brand new AI growth engine. I will give you that. But here at Iron Financial, we don't just admire the fortress from a distance. We get up close. We kick the tires, we stress test the walls. Because every single fortress, no matter how strong it looks from the outside, has a potential weakness. And when you start to look closely at Adobe, the market's fear, well, it starts to make a lot more sense. It is time to go searching for the fault lines in Adobe's armor. And you know what? We found one immediately. Look at this admission, straight from management's mouth, on their own earnings call. Our traditional stock business saw a steeper decline than we expected. This isn't just some minor headwind, okay? This is a core legacy business, Adobe stock, and it is actively crumbling. And the scary part is, it's happening faster than even they anticipated. This is a significant crack appearing in the foundation, and it raises a terrifying question for investors. Is generative AI, their supposed new growth engine, actually cannibalizing their own products faster than it's creating new revenue? That's a huge problem. And then you have this. A seismic shift at the very, very top. A new architect is coming. Shantanu Narayen, the leader who has guided Adobe for 18 years, the guy who architected this entire modern subscription-based fortress, he's planning his transition. This is a massive variable to introduce right now. Leadership change always introduces uncertainty, especially after such a long and incredibly successful tenure. When the master builder leaves the project right in the middle of a competitive siege, you have to ask a serious question. Can the structure actually withstand that kind of earthquake? Can the new leadership maintain that same vision and, more importantly, that same execution? The market hates uncertainty, and this is a big one. But this right here, this is the number that is causing the most fear on Wall Street. This table tells the whole story of deceleration. Just look at the trend line. Ending annualized recurring revenue growth is slowing down from 11.5% last year to a guided 10.2% this year. And what's even more concerning is that the consensus on Wall Street is that their overall revenue growth is going to fall to just 8.6% over the next year. Look, a premium value tech titan like Adobe cannot afford to decelerate into single-digit growth. That is the territory of old, boring legacy tech, not a creative software powerhouse. The question for every investor becomes, is this a temporary speed bump, or is this the beginning of a long-term structural decay? And hey, we are not the only ones seeing these cracks. Wall Street is hitting the alarm bell loud and clear. You've got TD Cowen slashing their price target all the way down to $325. Jefferies cuts their target to $290. These aren't minor tweaks, folks. These are significant reductions in valuation. And as we saw at the very beginning, the stock has been absolutely brutalized, down 22% this year alone. This isn't just retail panic selling. The so-called smart money is clearly pricing in these structural risks. When the analysts who cover this company day in and day out start running for the exits, you have to pay attention. Okay, those are serious cracks, and Wall Street is absolutely right to be concerned. I get it. But the entire bear case, while it's valid, it hinges on this one big assumption, that AI is only a threat. It completely ignores the other side of the coin, which is AI as Adobe's ultimate engine for growth and for dominance. You see a crumbling stock business and new competition. I see a battlefield where the war for the future of all creative work is going to be won or lost, and Adobe is already on that field with a massive war chest and an army of loyal users. Yeah, to really understand this war, we need to look at what the market is truly worried about. And this chart is fascinating. It's from a prediction market, and it shows the probability that certain keywords would be mentioned on the earnings call. Now, of course, they were going to say generative AI. That was a 96% chance, a near certainty. That's just table stakes these days. But the real story, the signal of the market's deepest anxieties, is further down the board. It isn't what they expected to hear. It's what they were deeply uncertain about. And this right here, this is the absolute heart of the matter. Firefly Video and YouTube were both sitting at a 45% probability. Just think about that for a second. The market was pricing in a less than coin flip chance that management would aggressively lean into the fight over video. Why? Because video is the beachhead where competitors like OpenAI with Sora and Runway are launching their assault. And their approach isn't just a better tool, it's a whole paradigm shift, moving from complex timeline-based editing to simple prompt-based creation. This is a direct existential threat to Adobe's Premiere Pro franchise. The market's shocking lack of confidence here is a massive, flashing red flag that Adobe might be losing ground in the single most important new battle.
So this slide captures the two opposing forces perfectly. This is the entire debate in a nutshell. The bull view, on the left, is that AI is a powerful new growth engine, and we saw the hard proof of that with that $7 million upsell. It's a tool to make their moat even deeper and wider by integrating it into the professional workflows that people already trust and use every day. But the bear view is just as compelling, and it argues that AI is an existential threat, that it's going to commoditize their core products, turning them into simple text prompt interfaces. Why would you pay a hefty monthly subscription for Photoshop or Premiere Pro when a competitor gives you a similar result for cheap, or maybe even for free? This is the central conflict that is going to define Adobe's next decade.
All right, we've laid out the bull case built on a foundation of solid rock. We've stress-tested the bear case, and we've identified the very real cracks that are forming in the armor. We've examined the AI battleground from both sides of the hill. Now it's time to weigh all the evidence. It's time for the final iron financial verdict. Is Adobe a fortress, or is it a facade? Let's put it all up on the final scorecard. In the fortress column, the evidence is just overwhelming. You've got record revenue and EPS, a massive almost $3 billion quarterly cash flow. You've got hard, proven evidence of AI upsell with big enterprise clients. And you have explosive 3 times growth in AI usage. I mean, the numbers are a brick wall. But then you look over at the facade column, and the cracks are real. Decelerating ARR growth is a fact. The stock photography business is crumbling. The CEO transition creates this big cloud of uncertainty, and that competitive anxiety in AI video is palpable. You cannot just ignore these weaknesses. So here's our final logic, broken down into 3 simple steps. Step 1, the numbers are a fortress. The financial strength, the cash flow, the profitability, it is undeniable. That foundation is absolutely solid. They have the resources to fight any war they want. Step 2, but the moat is shrinking. This is the problem. Decelerating growth is a mathematical reality, and the competition from these nimble AI-native startups is a serious, credible threat. They are coming for the castle. Which brings us to step 3. The verdict hinges entirely on AI execution. All of this comes down to one single question. Can Adobe leverage its immense resources and its deep enterprise relationships to win the AI video war and re-accelerate its growth? Or will AI become the Trojan horse that brings the whole fortress down from the inside? So, the final verdict from Iron Financial. The market has punished the stock, sending it down a painful 22% year-to-date. The fear is real and the concerns are valid, but the financial foundation, the raw power of that balance sheet, and that gusher of cash flow is simply immense. Adobe has the resources, the distribution, and the enterprise relationships to win this war. We see the current weakness not as a sign of some terminal structural decay, but as a market overreacting to the fog of war and uncertainty. Yes, the deceleration is a concern, but the AI monetization is a proven, high-margin reality. For us, this looks less like a trap and more like an opportunity to buy a category king that's under siege, but one that possesses more than enough firepower to defend its throne. The risk is real, absolutely, but the potential reward for those willing to look past the short-term fear is substantial. So we leave you with the ultimate question you must answer for your own portfolio. Is Adobe a foundation for growth, or is it a bull chart?
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.